Good afternoon and welcome to the Asian Midday Market Watch. Our guest today is David Kuo, founder of the Smart Investor, coming out of Singapore. Now, David, as on this Friday, as always, great to have you on the show.
Thank you so much. Even though there is a war going on out in Eastern Europe somewhere.
Well, the thing is, we'll get back to you on that and how perhaps investors have opportunities to make money because of the war. You know, there's always a silver lining when there are negative effects. But when we first start, let's take a look at how Bitcoin and Ethereum have bounced back overnight. Bitcoin is at 38,787.5. It's up 11.1%. Ethereum is at 2,623.55. It's up 9.19%. Now, if we look across the region at regional stock markets, we'll start close to home with the SGX. The Straits Times Index is at 3,304.55. It's up 0.87%. If we look across the region, we've got the KLSC, which is at 1,595.31. It's up 1.36%. Shanghai is at 3,453.03. It's up 0.65%. The ASX All Ordinaries is at 7,268.3. It's up 0.21%. The Nikkei is at 26,456.5. It's up 1.87%. The Hang Seng bucks the trend. It's down marginally 0.12% at 22,868. Rounding up the numbers, we've got the Kospi, which is at 2,680.73. It's up 1.21%. Now, David, what's your view on why markets have performed so well today? With the exception of the Hang Seng, we've got a sea of green.
Well, I think primarily there are probably two reasons. The first one is that people probably thought that the sell-off was a little overdone, particularly in America. They thought that the sell-off was overdone. And we saw this massive turnaround in three indices over in the US. So the Dow, which was down quite significantly, bounced back. And so too did the NASDAQ and the S&P 500. So people are probably aware that whenever you hear the sound of cannons out there, I'm not saying there's a buying opportunity. I hate to say that, you know, when we hear people suffering over in Eastern Europe, that there is a buying opportunity. But unfortunately, life does go on. And if you are an investor, you have to sort of tune out some of that noise out there and say, what is my focus? What is it that I'm looking at? If I'm looking at a pleasant retirement in 5, 10, 15 years' time, then if you see share prices that are down, there is an opportunity there for you to go and pick up some of those shares, because probably in 10, 15 years' time, when you look back, some of us probably won't even remember what has gone on in Eastern Europe, and particularly my kids. It is not something, you know, that will actually affect them that significantly. But what is going to affect them, of course, is with higher oil prices, we're going to get inflation, Brian. And if we're going to get inflation out there, you have to put your money into something. And just simply putting your money into things like bonds or cash is not really going to help you a great deal.
And David, I'm going to share some stocks that are your personal favorites. And here are some of them. Of course, Unilever, Procter & Gamble, Starbucks, and Coca-Cola. So those are your perennial favorites. And they've not done too badly over the last couple of days.
Well, I wouldn't have thought that they would do that badly. What you actually see with these three companies, Brian, is that they have what I call that magical quality called pricing power. Now, we heard from Starbucks this month, and it said revenue this month in the last quarter climbed from $6.7 billion US dollars to $8 billion US dollars. Now, you look at a company like that, which has been able to increase its revenue and also increase its first quarter earnings. And what was the reason behind that? It was able to increase prices. And what it actually said, which I think really people should take note of, is that it has raised prices twice in the past 4 months. And it expects to do so multiple times this year. So this is a company that has got pricing power. Then you have a look at Coca-Cola. I mean, it reported first quarter adjusted earnings of 45 cents, and it said sales climbed 10%. And it expects to be able to grow its revenue somewhere between 5 and 6% this year, primarily because of the increase in commodity prices. So these companies do have a huge amount of pricing power. But apart from those four, Brian, I mean, a group of companies that I'm very focused on at the moment are some of these Malaysian companies. And since we are Asian focused, it's probably worthwhile mentioning, you know, how some of these companies have done. Look at British American Tobacco in Malaysia. Now, its revenue rose 14% this year. Then we have Heineken, which posted a 77% jump in first half profits. Now, when you have a look at these kind of companies, and if you see the market is down, and you just heard from a company that has been able to post a 77% increase in profits and also be able to pay a dividend, for an income investor like myself, that is just music to my ears. And so it's not unsurprising that I have been in the market and I have been buying shares. And one other thing, just before we go, Brian, is that any subscribers to my portfolio will see that, yeah, share prices can go up and down, but what doesn't go up and down, but in fact tends to go up, is the amount of dividends that companies are able to deliver. Now, I have this Malaysian-focused portfolio, and in the first year, now listen to this very carefully, Brian. In the first year, I collected about 10,000 ringgits in dividends. In the second year, I collected 13,000 ringgits in dividends, and in the third year, I collected 15.8 thousand Malaysian ringgits in dividends, and I would expect the next 12 months to actually deliver even more. So focus on the things that are important, not the things that, you know, are irrelevant. And the things that are important to an income investor is, how are those dividends growing? And it seems as though those dividends are almost growing exponentially.
That's fantastic, David. One more thing I want to also bring out is another one of your favorites, a group of companies which are your favorites, basically the banks.
Yep.
Well, so UOB, Public Bank, OCBC, and DBS.
Well, certainly the bank results look good. And for those people who are interested in the banks, Public Bank has only just announced its full year profits for 2021. And profits were up around 17%. And it has also announced its dividend. So out of those four banks, I think DBS is the one. DBS is the one that's grown its profits around sort of 30%. UOB around 30% also. Then you've got OCBC, which also delivered an increase in profits. Public Bank has done so. And yesterday we heard from Maybank. So if you are a bank investor, what you need to do is to actually stay invested in these banks. Last year was an aberration. A lot of people left the banks and they said, I don't really want to hold bank shares because of all that uncertainty. And guess what, Brian? I was out there buying as many banks as I could. And it wasn't just those four that you've got there. Maybank also. And I was out there buying Barclays. I was out there buying HSBC, Standard Chartered. And right now I'm sitting on a pretty healthy capital gains on the amounts that I've invested. But I'm not about to sell. I'm about to enjoy those dividends. And when the next dip comes along, if it comes along, I'll be out there buying some more.
Now, David, as always, thank you very much for your sagely insights.
You're welcome. Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on Biztech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out our website, www.biztech.asia, for business and technology conversations, as well as our social media platforms. Please like and subscribe our various platforms. Thanks again for tuning in.